Hello traders, welcome to FreeFX. I'm Francesco, and today we're going to talk about something that's quite interesting. EURTRY is the currency pair. EURTRY is the Turkish lira versus the euro. This currency pair is subject to a lot of fundamentals, but essentially, technically speaking, it has been in a decade-long uptrend. I've covered it before. It's something that I keep coming back to because it is just one of those pairs that captures imagination, and technically it's very subject to technical analysis, especially at the moment in the current pullback that we've experienced. Here's the pair. I'm going to go into some more detail now, and the pullback that we've experienced now is absolutely fantastic. Let me just break it down for you in a second. First of all, we're going to start with this pair, and a few days ago talked about this in some detail, and essentially what you notice is that this pair has a triangle that was forming in a number of weeks, and then essentially this triangle gave us a descending formation. It was broken, and then after the break we had the current pullback. So here's a triangle. What happened with that triangle was that we experienced a long compression of price from the base of the triangle to the apex. We had this squash, and then eventually the breakdown happened. After the breakdown, we didn't know where this was going to go, and I think it's quite clear to say it didn't actually deliver on that breakdown because the downtrend continued for a few days. It stalled and reversed. However, and this is the interesting bit, this is a very interesting bit, because if you take this and continuing both to the right but also extending to the left, you will notice this area here actually has a few significant candles. If I just make it absolutely clear what I'm talking about here and here, you'll see these candles just to the left there. So these candles are quite interesting because if you look quite closely, you'll notice that they are not full candles. They're very small, and then if you take this and pull it just about there, you can see there's some kind of stalling at these levels. However, that's not so important as what happened with the descending triangle. Obviously at this point there wasn't really a triangle to speak of, so let's say that the triangle started here with these long wicks happened around the 11th and 12th December 14th, and that basically is what the descent became, and eventually it broke. So let's take this line down just a notch so you can see these candles a bit better. So that's where we're at now. Let's put it back up. Where we are currently is that we had a breakdown. The breakout actually failed because after the breakout, although it's quite significant, I'm going to measure it in a second. After the breakout, we pulled back, and basically it's failed that gap. It's reversed it right through. Let's measure it first of all. So how is this significant? Well, if we actually looked at something like an average true range and we gave it something a little bit faster than your sort of 14-day, we probably see that price responded pretty quickly. But let's keep it at 14 for a second and see where we're at with that. We have this massive pullback now, and obviously the range has shot right up. So currently we're at what is it, 1374. If we actually measured today's move and we did a shift and click, you'll see that it's not so far from the truth, because if you go up to the top of that wick, it's measuring 3549, and obviously that's the average that we see. So let's change the average here. Instead of 14, we'll make it a we'll make it something like a 2-day. The input will be, instead of 14, is 2. You won't see that obviously. Usually we're looking at something like 7 or 14 days, etc. There's RMA, SMA, EMA. Let's put it to SMA instead, smoothed. Okay. Alright, so let's kind of get rid of all these and see how much further this travels when we do that. Alright, so let's move that to somewhere. Okay, so we're now seeing something like 2821, which is a bit closer to what I actually saw today. 2821. And As I said, it was over 3,000 pips actually in the end on the day. But with this, armed with this, we can see that even as it is a bit more responsive, but certainly today beat the previous few days. Now, there's the really important thing. Today's price range obviously beat anything we've seen for a number of days. And if you look at the levels here, probably not seen since back in November, and where we had this massive drop that kind of started it all. The problem is that, and I've said this before, where do we go from here? So there are two things here, two takeaways. Number one, let's kind of write them down. The first takeaway is that we've had, number one is we've had previous drop comparison, and two is pulled back from a significant level, right? We've got these two things that we cannot get away from. So considering all that, I think it's important to say that, and I've done this before, we measure this previous drop back in August and then decide if it's the same. So first things first, we will take this area here and box it up. And once we box it up, we'll actually look at that and say, yes, it is the same, or no, it isn't. So let's take all of that, okay? And essentially we see it's from 587 to 792. So already, okay, we know it's about 20,000, 23,000 pips. No, sorry, 25,000 pips. And then we go to this area and we do the same. We box it up and essentially look at that and say, okay, from here to here, okay, and this from it's from 837 to 1006. So that's 9, 10. That's not quite the same, because it will be something in the region of, I think it's 937 would be 10,000 pips, and then it'll be something like 70,000 pips, let's say, instead of 25,000 pips. So a smaller move in a way, but also from top to bottom, but also of similar magnitude. And in terms of length, we'll see that we have a similar number of days. So we can take that box and see how many days that box gives us. So let's look at that. From the 8th of August to the 10th of December 2008. Okay. 4 months there. This one is actually we should probably stretch it a little bit because it's coming from there. That's from November to February, so 3 months instead of 4. So that gives us two things to look at. One, what was the shape of the previous move? It was straight down, and then down to this level, which then became support. And then we had a throwback, and then continued higher. Again, a descending triangle. But this time there isn't actually a move higher, so breakout to the upside. It's a breakdown to the downside, but that failed. Well, it didn't fail. It broke down and it continued for some days. Now it's pulled back. That's why I say it's failed, because it's a significant pullback. But it does put into question whether this is a true breakout with continuation, or if it's a false breakout. So the way to resolve that is twofold. Number one, we simplify things further and we make this a line chart like this, and we go to a higher time frame. Higher time frame, I'd say the weekly chart to begin with. Okay, so we can see the move there, and straight up here, that would be a support line, and you know there's no kind of That's sort of a descending triangle, and the break to the upside, and that continued. So for that to be equivalent, we would have had to have had a break to the upside, and then a significant pullback. We sort of had that, and then a continuation. Now, if we look at that pullback from here to here, let's measure it. So if I do shift and click from here to here. So let's call that a throwback, and it was five trading days. Okay. So currently, this throwback that we experienced, we can go back to our candles. Basically is not 5 days, it was 5 candles, so 5 weeks. In this case, this pullback is actually just a single week. So quite an accelerated pullback, which again, it makes me wonder whether it's a sudden move and whether it has any legs on it. What's actually even more significant is if we just take this and push it to one side. If we look at the daily again, we've got something here that's pretty significant, and that's the size of the wick here. So let's kind of have a look at this for a second. You'll see the size of that wick. So if we measure this again, we'll see that that's the size of today's move. As I said, 3,525, let's say. And this section here is about 1,142. So it's kind of like not quite a third of the move, but it's a significant part of that move. And what's really significant, it actually comes to that level, which is kind of resistance at the moment. And there's no reason why, if we look at the intraday action, there's no reason why it couldn't have continued higher. So let's kind of put it into context there. There's your intraday action. I'll just kind of magnify that a little bit. So you see your hourlies, okay, and there's the size of your wick there. You see your hourlies, and it goes up, and then if we make this a little bit more precise, it's about there. And then we have a big wick essentially, and this is kind of where it stalls. So it kind of really, that massive candle we had today was basically half the size was an upper wick, if not greater, and half the size was the body. So big pullback from there, and we stalled at that point, big rush, etc. Another thing we're going to look at is this. This is the fantastic reference, which I would use always for the TRY pairs. So in purple is a Euro TRY outlined, and what you can see there is that we've got price action and the RSI below at 14 periods. This is the daily chart. So in light blue, which is the main chart actually, is the MSCI ETF Turkey index. And you can see that we've had several months, in fact more than it's kind of years, hitting these levels. So for 3 times we've actually hit this level, and since hitting that level we've always retraced it. When we retrace, that means the lira's value is dropping, and so the Euro TRY rises. Every time this index has kind of dropped, it's kind of gone back to the previous level, but the retracement, the equivalent retracement on the lira pair has never been of the same magnitude, which means that overall, whilst the index came back to the previous levels, almost as if it were capped, the lira pair has actually continued to rise overall. Although obviously when these kind of rises happened, it did dip. But overall, it kept into an uptrend until we got to this point, the current sort of top there, and this rise actually, maybe because of the steep incline, has caused a significant rebalancing of lira pairs to the downside. And there's something more as well, that so today's drop of the MSCI was significant, and that obviously gave us this steep rise in the EURTRY pair. What's significant as well is that for a few days we had something quite incredible, which is that we had a negative divergence. Okay, so that you can see that there, and then here you can see that there. So the divergence is obvious since the beginning of January, almost. Yeah, beginning of January, we had this lower highs from the RSI and higher highs from the MSCI. The other thing that we noticed as well, that around here we hit the 80 plus level, which we hadn't seen for quite some time. You know, it never really got to those levels. It's been overbought before. But you see that 72, etc. We actually reached the high of that. It was 83 or something on the RSI. So that was obviously an explosion point, a catalyst, and then the negative divergence, and eventually price came down. So in this case, RSI was a good indicator and not just a lagging indicator. Now, my question is, if this continues to come down, the EURTRY pair could continue to climb. But what we need to look at as well is volume. Okay, this is the daily volume, obviously. And we can see the daily volume. That's during the rise there. Lots of buying, selling was, you know, rising volume in selling and moving price, which obviously actually was meaningful. What we need to see in the next few days is whether we have a continuation of selling. Okay, we had significant selling back here in October of last year, and it's been buying for the most part. This kind of degree of buying in November was not matched by January buying, but it's been sustained buying nonetheless. We need to look back as well to see how this happened before and the effects it had. So back in 2018, there, that big move, what was the buying back then? So we scroll back to that move in 2018 and see what the mood was back in August there. That big spike and then the descent of the pair. And there we had the buying there, and again fairly significant buying here, and it got to these levels. Volume was 4 million, and if we compare that spike in volume to our more recent example, we'll see if there's any kind of matching volume. So that's the big spike there. The volume there was 3.8 million. So an equivalent in terms of volume in these two moves when it started bringing down the EURTRY pair. So back to our chart, I think it's quite important to watch the next few days before we declare this to be the resumption of the uptrend or just a pullback and then a continuation of the current downtrend. I would call it a trend within a trend or a secondary trend, because obviously if you look at the size of the overall trend, it has been a massive uptrend for years and years and years. And this could be a trend within a trend or a correction, if you want to call it that. And this also could be called a correction. But certainly this move is dubious until we close above this resistance line for a few days even, and then see if we can get back to these highs. How we would trade that then is the move of this triangle here. The triangle could be said to start here really, because that's not truly a triangle. So we would take that and measure it, and basically we would take the height of the base of the triangle and then project that further high. So we take that and basically move it from that point on. That would take us essentially to beyond this high of November, and so we would aim for something like 1025, as our target. Remember that buying EURTRY pairs is very expensive, therefore it's not something to just hold on to if you're a day trader and are not sure that you're going to make a significant return in a fairly short space of time, because there are periods of chop and you sort of every day your rollover is negative. So just bear that in mind. Thank you very much for watching. I hope this was a useful video, and I will see you in my next video of my series. Take care and trade safe.